Hey everyone, welcome to the Thursday edition of FreightWaves Now, straight from Freight Alley. Today we're going to hear from Donnie Gilbert talking about the carrier update, but first, let's start off with a little shipper action. So on my first chart, I've got our outbound tender rejection index. For most of you that have followed FreightWaves Now, you know what an outbound tender rejection index is. It's the rate at which carriers are rejecting their electronic tendered freight. As this rate goes up, that means that there's going to be increased rate pressure. It's going to go up over time. Right now we can see clearly that this has moved way on down to 3.79% after peaking this year at, some would say, kind of a soft season. So it wasn't like the peak that we saw last year where tender rejection rates were actually up over 20%. Right now they've fallen all the way back down to almost record levels at 3.79%. That means that shippers are going to have a real easy time being able to send their freight over to their carriers and get those loads accepted. They don't have to spill over to the transactional market. If we go to my next chart, really the big theme of what's happened this year has been the pull forward, the tariffs. Los Angeles, the Port of New Jersey, New York, Savannah have all seen increasing record volumes over the last 12 months. Well, that trend is continuing into 2019 as we have increasing tariff concerns. What's happening right now, though, is that a lot of this volume is shifting to the East Coast. Last year, you can see here, this chart is showing outbound tender volume index for Los Angeles. Los Angeles had record volumes this year. They were 30–40% higher in the spring, and they're still continuing to be that level. But who's catching up is Newark. The Port of New Jersey over here is really starting to see an increase in inbound volume. So that means that a lot of shippers are starting to diversify their freight pattern. They're going to move to the East Coast. Something to keep in mind as we see increasing tariff concerns moving into the third and fourth quarter.